Hello friends, and welcome to the demo on TradeTiger. In this demo, we are going to discuss about the new indicators that we have launched in the new version of TradeTiger, namely Gann HiLo indicator, Advanced Distribution Volume, which is ADV, Chande Momentum Oscillator, CMO, Money Flow Index, MFI, On Balance Volume, OBV, and lastly Price Volume Trend, which is PVT. So in this demo, we'll see each and every indicator one by one. We'll also discuss very briefly about the calculations done behind it, and of course the most important aspect, how we can use these indicators to figure out entry exit points for us. So let us go ahead by looking at the first indicator, which is Gann HiLo indicator. This indicator is used to identify trends and spot entry exit opportunities very easily. This indicator is very useful for short-term traders as it is very clear to identify. Speaking about the calculation in very brief, is this indicator basically is a simple moving average which considers the previous 3 periods highs or lows to calculate and form a trend. So how can we use Gann HiLo indicator to spot entry exit levels? Well, the formula is pretty simple. If the candle closes above Gann HiLo indicator, it recommends a buy. If the candle closes below Gann HiLo, it recommends a sell. Let us take an illustration of it. Well, what I've done over here, I've taken a picture of a Gann HiLo indicator applied on a daily chart of Nifty. Well, as I have discussed a minute back, we can easily find the areas or the candles which have closed above Gann HiLo indicator. Now in this particular area where our green signal is indicated, we can easily see that a candle has closed above Gann HiLo, and since it closed above Gann HiLo indicator, it recommends that the trend is predicted to be on the bullish side, and as we can see, going ahead till the point up to this red mark, which is where the candle has closed below Gann HiLo indicator. So basically this is how we can use this indicator on the real time as well. Let us jump back to the TradeTiger and quickly. So on that note, let us go back onto the TradeTiger screen and see how to apply Gann HiLo indicator on the charts. In this screen we are looking at a daily chart of ACC. To apply Gann HiLo indicator, simply insert the study box by clicking on S. Select Gann HiLo indicator and click on apply. Once this indicator applied on the chart, we can look for the candles closing above or below the Gann HiLo indicator and accordingly make timely decisions to enter into the markets. And that's all for the first indicator, which was Gann HiLo indicator. And on that note, let us jump on to the second one, which is Accumulation Distribution Volume. Our second indicator in this demo is Accumulation Distribution Volume, which is also called as ADV. Accumulation Distribution Volume is a momentum indicator which gauges supply and demand by determining whether investors are generally accumulating, which is also called as buying, or distributing, which is also termed as selling, a certain stock by identifying relation between stock price and volume flow. In short, when ADV moves along with the upward price movement, it shows that the stock is being accumulated, as most of the volume is associated with rise in price, hence indicating a bullish trend. On the contrary, when ADV moves down along with downward price movement, it shows that the stock is being distributed, as most of the volume is associated with the fall in price, hence indicating a bearish trend. So how can we use ADV to spot entry exit levels? Well, again, it's pretty simple. We have to look for the breakout, which is called as divergence. What we mean with the divergence? Let us discuss. With this indicator, we can find easily the situations where the indicator is moving in the opposite or sideways direction in relation with the price. This indicates a divergence, and we can wait to confirm the reversal in price and make timely transactions. Well, let us take an illustration of it. I have captured a screenshot of a chart where I have plotted ADV onto the Tata Motors daily chart, and the highlighted area is what exactly we are looking for. Normally, most of the times ADV will move in relation to the price, but we look for the point where ADV is not moving in relation with the price movement, and that is when we can expect a change in the trend. Now in this case, even though Tata Motors was slightly on the downtrend, we can see at the same time ADV was not moving in relation with the price movement, that is downside. It was pretty much sideways, and this is the area where we can predict that the trend is bound to be changed in near future. So we'll have to wait for such situations, and when we find these situations, we can definitely make timely entry into the markets. So get back to the TradeTiger and let us apply ADV on real time. Well, as we saw in the previous indicator, we have opened a candlestick chart of daily interval for the stock ACC. Now to open accumulation distribution volume, all you have to do is press S, the key S, which opens the study box, and apply ADV. Click on apply. Yeah, it is. Well, as I said, most of the times the ADV will definitely move in relation to the price movement, but we have to actually look out for the divergences, the breakouts. That is when we can make a right entry in the market. Of course, as I said previously, we recommend to combine this indicator with your studies to confirm your trade signals before entering into the market. So that was majorly about accumulation distribution volume, which is ADV. Let us quickly jump on to the third indicator, which is CMO, Chande Momentum Oscillator. CMO is a technical momentum indicator invented by the technical analyst Tushar Chande. This indicator is similar to the RSI, where we look out for overbought and oversold conditions. Well, it is created by calculating the difference between the sum of all recent gains and the sum of all recent losses, and then dividing the result by the sum of all price movement over the period that we have calculated. So this is speaking about the brief description about the calculation on CMO. How we can use CMO to spot entry exit levels? Well, as a general rule, CMO is used to gauge overbought and oversold conditions. Mr. Chande quantifies the range levels as plus 50 on the higher side, 0 as the pivot point, and minus 50 on the lower side. So on the bullish side, indicator crossing above plus 50 indicates overbuying of a particular stock, and hence a reversal in trend is expected in the near future. On the contrary, while if the indicator is crossing below minus 50, indicates overselling of that particular stock, and hence a reversal is expected and on the upside trend as well. So let us apply CMO on the real chart and see how this indicator looks like. Again, to our favorite script, we are on to the ACC daily chart. Let us open CMO by visiting the study box by clicking S and select CMO. Well, the average period as per the traditional norm which this indicator uses for calculation is the last 14 days. Our traders can also change this average period by clicking this, and we can increase or decrease the average period which suits our trading style. Once it is done, click on apply. Once applied, we can see CMO opening right on the chart, and as the range we discussed is plus 50 and minus 50. Now let us quickly track some of the positions, some of the areas where CMO indicated overbought and oversold situations. Now in this case there was an overbought situation out here, and since it indicated an overbought situation, we expected a downtrend in near future, and that is exactly what we noticed in the period out here. It was when on the downside CMO indicated an oversold situation as well right at this point, and since it showed an oversold situation, we expected a change in the trend pattern, and we expect ACC to be on the uptrend from that point of time, and that is exactly what we noticed when we look at this particular chart. So again, at this point of time, it again gave us an overbought situation, and look at the trend moving since then. So this is how we can apply the study and use it in our trading style by looking at the overbought and oversold situations, and this tool basically can be really useful when combined with the other strategies or the other studies that we apply on the charts, and effectively give us a good and timely trade signals. So that was speaking about the CMO, Chande Momentum Oscillator. That was all about this indicator. Money flow index is an oscillator which uses both price and volume to predict the reliability of a current trend. Money flow index adds trading volume to the relative strength index and is sometimes also referred to as volume weighted RSI. So how can we use money flow index to spot entry exit levels? As a general rule, MFI is used to gauge overbought and oversold conditions. On the bullish side, indicator crossing above 70 indicates overbuying, and hence a reversal in trend is expected, while on the bearish side, indicator crossing below 30 indicates overselling, and hence a reversal is expected as well. So let us take an illustration of MFI by applying it on the chart. We are looking at a daily chart of ACC. To apply money flow index, all we have to do is insert study box, select money flow index and click on apply. As soon as we apply, we can see a lot of overbought and oversold situations. So let us take examples of the effectiveness of money flow index. Well, there was one situation where stock was pretty much falling, the stock was pretty much on the downside, but at this point where I've drawn an arrow mark, money flow index indicated that it has been an oversold situation, and since it was indicating an oversold situation, we can predict a change in the trend, and that is exactly what we noticed when it started coming up. Look at the second arrow which I've drawn. Since then it was pretty much on the upside trend up till this point where money flow index indicated a strong overbought situation. So as I said right in the beginning, these indicators are very useful for short-term traders who are looking for quick entry exit points, or also for the swing traders who tend to take their positions, carry their positions for a week's time or maybe a 2 or 3 days time. So they can use these indicators and look for the overbought, oversold situations and accordingly make timely entry into the market. Now there was another oversold situation over here. I've drawn it, the fourth arrow, and since then again ACC changed its pattern and it was moving pretty much on the higher side. So that is exactly how money flow index can be applied and used to spot entry exit levels. Of course, as I've been saying, we recommend to combine these indicators with your regular studies to confirm the trade signals before entering into the market. So that was all about money flow index. On balance volume measures buying and selling pressure as a cumulative indicator that adds volume on all the up days and subtract volume on all the down days. It was developed by John Granville in 1963 and it is one of the first indicators to measure positive and negative volume flow. We can look for divergences between OBV and the price to predict trends or use OBV to confirm price trends. In short, when OBV moves up along with upward price movement, it shows that the volume is directly associated with the rise in price and hence indicating a bullish trend. On the contrary, when OBV moves down along with downside price movement, it indicates a bearish trend. So how can we use OBV to spot entry exit levels? Well, it's pretty simple. We look out for the divergences. We look out for the breakouts. With this indicator, we can easily find situations where the indicator is moving in the opposite or sideways direction in relation to the price. This indicates a divergence and we can wait to confirm the reversal in price and make timely transactions. Let us take an illustration of on balance volume to understand it in a much more effective way. I have captured a screenshot of one of the instances when we applied on balance volume onto a chart. I've applied on balance volume on Nifty chart of daily interval, and as we can see in the highlighted area, even though the index was pretty much moving on the upside trend, slowly and consistently on the upside trend, on the contrary, OBV wasn't moving in the relation to the price. It was moving sideways, and these are the divergences that we can actually look out for and we can wait for a change in the trend. Now, as we discussed, as we saw a minute back, that if the price is moving in a particular direction and if OBV is not moving in the direction of the price, it indicates or it basically predicts a change in the price trend, and that is exactly what happened. Since it was showing a sideways movement, price started dipping down, and since that point the index has started falling down. So these are the divergences that we can look for. We can capitalize these divergences. Of course, we can wait for some time to confirm the reversals in the price movement, and we can make timely decisions. So how can we apply OBV onto the charts? It's pretty simple. As we applied the previous indicators, we have to visit the study box by clicking S, select on balance volume and apply. Once applied, on balance volume gets open right below the volume bars. So that was all about the on balance volume, and let us jump on to the last indicator of this demo, which is price volume trend. Price volume trend is just another variation to on balance volume indicator with just a bit of difference in the calculation methods. Price volume trend multiplies percentage price change with volume to confirm the strength of price trend. On the bullish side, the volume is multiplied by the percentage price increase between the current close and the previous time period's close. This value is then added to previous day's PVT value. Well, on the bearish side, the volume is multiplied by the percentage price decrease between the current close and the previous time period's close. This value is then added to the PVT value. So how to use PVT to spot trends or enter exit levels? As I said, PVT is just another variation to on-balance volume indicator. In this indicator also, we look out for the divergences or the breakouts. Let us take an example of a PVT applied on a daily chart of Nifty. In the highlighted area, we can have a look at the bearish divergence. Now, the meaning of bearish divergence, as I discussed before, price continuously trending on the upside direction. However, PVT, which is price volume trend, was moving in the opposite direction or sideways direction. Hence, we can expect prices to change its trend and change its direction to the downside, and that is exactly what we noticed, as PVT indicated. So this is as we discussed during the on-balance volume. With this indicator as well, we look out for the divergences to make timely entry into the markets. Then applying PVT onto the chart is as simple as we've added the rest of all. Open the study box by clicking on S, select price volume trend and click on apply. Once applied, PVT. That's all friends for this demo. I hope it was pretty clear and pretty easy to understand. TradeTiger has launched many more exciting features recently. Are you updated with them all? Well, if the answer is no, simply log on to www.youtube.com and visit our TradeTiger channel. You can also subscribe our TradeTiger channel in order to stay updated with all the new features. Thank you for watching this demo and we wish you a very happy trading.